Hello, welcome to my channel, Trade with Position. I'm excited to have this video right here today. And here we're going to be talking about strategy. We're going to be talking about my Forex trading strategy as a swing trader. So as a swing trader, I might try to look for the big moves, moves that will give me about 100, 200, 300, 400 pips. Those are the type of moves that I kind of try to catch. And that's simply because I don't have the time to stay on the chart all day to check to trade the lower time frame, and that's why the strategy is more suited to me. So I would like to share this strategy with you so that for those of you that are looking for a swing trading strategy where you can be able to catch the big moves and you don't have to be on the chart all day, then this is perhaps a strategy that you would also like to test out and see if it works well for you. So now let's do so as not to take too much of the time, let's just go right straight into the strategy right now. Now, if you're completely new to Forex, you are completely new and you don't really know how to work your way right through the MT4 chart, I'm going to do a basic tutorial on the MT4 as you guys how to navigate your way around that. So that will be in a little video where you'll be able to see that. And if it's already available, you will see a link in the description or up that takes you over where you can be able to watch that and also get a recommended broker that you can use, which is the one I use, which you can also see on the chart right here. So you also see a link where you can be able to open up your account. So right straight into the strategy, like I said, I trade it on the daily time frame. That's where I take my trades from, and I'm currently on the daily time frame now. So I'm going to explain the chart setup for you so that you can be able to understand why I have my chart like this. So you one of the things I also want to do is you also make sure that your chart is clean. Is not overcrowded with too many things so that you can be able to see what price is doing at certain point. So now this strategy is simply based off trading, taking your trades at the end of the daily candle. So when new daily candle is being formed, that's when you are going to be taking your trade. So for me here in Nigeria, the current time that trade closes is 10 o'clock. So once a daily candle closes by 10 and the new candle that opens up, that's where I decide whether I'm taking a trade or not. That's the time I use for the daily time frame. But for lower time frames, you don't have to wait till that. You don't have to wait till the close of the day, till the close of the daily candle before taking your trade. You don't have to wait. You can trade at any time. But for those that are going to be taking trades on daily time frame, you have to wait till the close to take your trigger trades. So once we have that on the way, that's one of the conditions. So we are now going to talk about the indicators on my chart. So the first thing we have here is we have the moving averages, which you can see right here. So you can see that I have two moving averages. The first one here is the 8 moving average, and the 8 moving average is being set to linear weighted applied to close, shift of 0. And that's for your 8 moving average. And your second moving average that we have here is 10 moving average, shift of 1, also linear weighted, and you apply it to open. And these are the charts that let you know whether price is in an uptrend or price is in a downtrend, for you to be able to understand where price is at that time, and for you to be able to follow the trend, right? Because for swing trading, you want to be able to follow the trend. So these moving averages gives you that. So you can see that now based off the moving average that is here, you can easily determine when price is in an uptrend and when price is in a downtrend. You can be able to see all of that. And the next thing that we have here is we have the fractals. So we have the fractals that is here. Just basic fractals. Now these fractals helps us to identify area of stop. So when we take our trader, we are looking for, okay, where should we take our stop? Where you see your fractals is where you will put your stop. So if you are taking a sell trade here and you are looking for where to put your stop will be at the eye of this fractal formation that is being formed here after price has come down. So you know that this is the ideal place for you to put your sell and your stop rather. So once we have that on, so we have the moving averages up, we have the fractals up, then we now have the OSMA. Now the OSMA the OSMA here, you will see that from the indicator, chart. You'll be able to see your OSMA there. So once you take your OSMA indicator, using the default setting, that's what you're going to use as your trigger, trigger trade if it's the right time for you to buy, or it's not yet the right time for you to buy. So once you're about to take a sell, once you're about to take a sell means price is going down, then your OSMA has to be negative. And once you're about to take a buy, it means that your OSMA has to be positive. So that's just the summary of how the setup is. So what we're going to do now is we are going to look at, okay, what are the conditions that need to be met for you to take an instant sell or to take a pending buy and sell. So right here, I'm on my GBP USD chart, and I'm going to be using what has happened and what is also happening, to look at how you can be able to take your trades. So once you already have that done, so the first thing you want to do is, even though you're taking your trades on the daily time frame, you also need to look at what is happening on the weekly time frame, because remember, you are trading the higher time frame. So you need to go to the next higher time frame to see what is happening right there, so that you will have a basic understanding of the market. So right here, we can see here that we have on the weekly candle, we have a rejection here. We also have it here that also happened here. We also have a lot of price action that happened around these areas, and which is currently where price is at. And based on the moving averages that we are seeing on the weekly candle, we are seeing here that price is in a downtrend. Price is currently down. So what it means is, whatever opportunity of what I should be looking at this point would be the opportunities of taking a sell on GBP USD. So now that I've already known that, and also looking at what has happened in the past, a lot of action going on here, I will definitely be on the lookout on whatever type of trade I take. But right now, the pressure on the weekly time frame is more on a sell, because if you look at the last few candles, the last weekly candle, the last two candles on the weekly, they rejected the moving average, signifying a low buying pressure, and it came up with another week of another sell. And so it's likely that there will definitely be more sales that will be happening in the market. So right now, going forward, if I'm going to be taking a trade on GBP USD, I'll be looking at taking a sell. So since I'm not trading off the weekly time frame, I'm using the daily time frame. So I will have to now switch my chart back to the daily time frame. So the same thing also applies if you are trading, say, the 4 hour or the 1 hour. If you are trading on the 1 hour, you need to check what is going on the 4 hours and on the daily, so that you can be able to understand where price is at and where price is likely to go, so that you can be able to take your trades off the lower time frame for that. So now that I've established that, I'll be going for more of a sell on this, then I'll come right into the daily time frame and look at, okay, what is going on. So we're going to be looking at all the sell trades and the conditions that came off the sell trades that happened. And also on the daily, we can also see that there were some buy trades, there were some buys that also happened, but they were not for long, save for this one that was here. And this one that happened here is simply based off this bull weekly candle that we'll see right here, which caused the rejection. But we are still going to look at all of that. So based on the indicators that I've set, so let's first of all look at the conditions for a sell. Now, the conditions for a sell is that you need to see price trading below the moving averages. You need to see a crossover. The first one is you need to see a crossover needs to have happened or beginning to happen, as far as price movement is concerned and what you are seeing in your chart. You need to a crossover of the moving averages has to happen. So to the down sell, you need to see the 8 cross over the 10. So you need to wait to see the 8 moving average cross over to the 10. That's the first condition. And the second condition is you need to see a candle formation that formed below the moving averages. Once you see a candle formation that formed below, most especially the 10 moving average, then it means that the condition for the sell has been set. So let's look at let's look at this previous. We'll look at this current one that is going there, but let's look at what's going on in the previous candles here. So right here, I'm looking at this. Let me set it up here. So like I said, a crossover needs to have happened, and it is right on this candle where we start to see the real formation happen right here. So right here we can see here that the crossover has happened right here. There is a crossover of the 8 moving average coming down, coming below the 10 moving average, which signifying a change in trend. And right now on this daily candle. So right now, this daily candle, the second condition is the candle needs to close below the eye of the candle needs to close below the moving average. Now, when you look at this moving average, when you look at this price candle here on the daily candle, you will see here that the eye of this candle is still above the moving average. Now, because it's above the moving average, it has not yet fulfilled the second condition for the sell to happen. So what this means is you have to wait for the close of the next candle. And when you look at the next candle here, you will see that the price closed, the eye of the candle is below the moving averages, and it means that this tells you that the condition for the sell has actually actually happened. So the first one, the crossover; the second one, the close of the candle and what is being formed, and the third one is your trigger trade. So the trigger trade is simply, now that the second one has been formed, the third one is my OSMA already negative. So your OSMA indicator, which is right now, which is down here, that's what this indicator is for you to get your trigger trade, that whether it's time for you to take a sell. So once you see the close of this candle, what you simply do is you can now take an instant sell here. Now there are occasions whereby the candle formation that closes below with the candle formation will be like a strong, for example, sell. It can be a strong move down, which is a sell, and taking an instant sell at that position would simply mean that your risk would also be very, very high, right? So what you always want to do at that instant is at the close of that candle, you want to measure the distance between the close of the candle and where your moving average is. So if the close to where your moving average is, if it's less than 60 pips, then you can take your trade. You can easily take your instant sell trade right there. But if the close of that candle is more than 60, then what you simply do is you want to take a pending sell, whereby you measure 60 pips from where the moving average is and place a pending sell right in there. So right in here now, we're going to come in here and measure the pips from here to the moving average. So here we can see that from here to the moving average, it's close to 60. Okay, is about 56. So because it's less than 60, I don't need to take any pending sell. I can easily take an instant sell right here. When the new candle opens, I can take an instant sell here. And where will our stop be? Our stop will be right here. So our stop is going to be right here, right above this candle, using the fractal, because that's where the fractal is showing as the previous high, which is right here. So from here to here, let's look at the amount of stops that will be. I also need to know that if you are trading off the daily candle, your stop will definitely be high. So right here we have a stop of 115 pips, roughly 114 pips. So that's what you are risking in this trade. So what you have to look at is, what is your risk to reward? Are you looking at a 1 to 2 or a 1 to 3 or a 1 to 4. Now on a daily candle, what I always look for is I always look for 1 to 1.5. So 1 to 1.5 or 1 to 2, depending on the move that I see. And if I'm able to also follow the trade down, I can be able to move my stop later on, depending on what I see on the chart on the following day. But what I basically do is I always set my initial take profit to 1 to 1.5. So if we measure 1 to 1.5, we will be having that will be 114 divided by 2. That's 57. So that's about 171. So we're going to be looking at a total of 171 pips. And if we look at it right in here, 171 pips is just around here. So here is where we have your 171. That's 33791. All right, so this is where we have our take profit. So we use a 1 to 1.5. Majority of the time, I rarely use 1 to 2. Though if you're trading the lower time frame, you can use 1 to 2, but I mostly use 1 to 1.5, given how I learned this strategy, which I'm sharing with you. So I use 1 to 1.5. So here we can see here that we took a trade here. The stop was here and our take profit was here. And what did you see happened to price? Price simply came right down. So this trade took about how many days? That's 1, 2, 3, 4. 1, 2, 3, 4. So on the 4th day, after taking this trade, that is when our take profit is being hit right here, and we are in profit. So this is the condition for a sell. So let's look at the condition for a buy. Or let's take a look at another one before we now look at the condition for a buy. So let's look at this recent, this move down here that we have here. So the condition, which I said, we have to wait for a for the sale. Now, if you look at it here, if you look at this candle here, there was a sale, there was a crossover here. But if you look at the candle formation, the eye of that candle closed above the moving average. So you shouldn't be doing anything right here, because you are seeing like crossover is about to happen and trying to preempt the movement. No, you have to wait for a clear sign before entering the trade. So you can see here, this just would have just taken most likely taking your stock out or not, but this won't be a good trade to be on. So right here, we'll look at this trade here. So here we see that I will say price cross over here, and we'll see this long bull can long sell candle right here, and you can see here that at the close of this candle, price has clearly shown that this is a sell move. So right now, instead of entering an instant sell, because when you measure this is about 153. Yeah, so this is about 153 pips. So what you would do right here is, instead of you taking a sell, because your stop will be up here, and if I take a sell right here, look at your stop. Your stop is about 273. Now 273 is quite high, depending on the lot size that you're using and the account size. So you also have to be careful of the amount of stop that you use. So once you measure that, you'll be able to factor that in, like, okay, is this a trade I want to take? So right here, I will know that we have 273 pips. So what we are going to do is we are going to measure right from the moving average and measure 60 pips. So right here, we are going to measure 60 pips. So 60 pips is right here. That's 34674. 34674. So 34674 is where our 60 pips is. So what we are doing here with these 60 pips is we are going to be placing a pending sell here, that when price retraces back up, our trades will be triggered, and that would have also reduced our risk down to about 170 pips. So when we measure it here, okay, so it should have reduced it to about 180 pips. as where our stop is. But here you can see that what happened next was that price didn't even get to where our pending sell is before going back down, which is quite good, which is also okay, because one, you didn't lose anything, and your capital is still safe. So it happens. So for this trade, you won't be in this trade on the daily time frame, because your trade won't have triggered. And here you can see that what happened next was that trade actually came right back down. All right, so now that we've already have that, so when you look at through other formations for a sale, you will see, you'll be able to know whether you have to take an instant sale or you have to take a pending sale, based on what I've just explained to you. Now let's look at the conditions for a buy. Now for the condition for a buy, what you are simply waiting for is you are waiting for a price formation that is above the moving averages, that goes above the moving averages. So for here, we can see here that price, there was a crossover around here. Now you also need to take note, when you go up to your weekly time frame, you'll be able to see what is going on in the market. So here you can see here that this is already a weak formation that formed. So if you are going to be taking a buy on the moving average, it wouldn't be that strong, and so you have to be careful. That's why it's very important for you to check what is going on at the higher time frame, whether the buy you are going for is the right move or not. So here is a trade that is a trigger, but it didn't work out as planned, because that's just it. You can't win all trade. You can't win all trade. So this strategy, don't expect it to be 100%. It is not. It's about 60-70% good. You get, so you won't always expect your trade to be 100%. All right. So the condition for a buy here is you see a crossover of the moving average to the upside, and you wait for price to close above the moving average before taking a buy. So right here we have this happening here. So right on this trade here, you are seeing here that price came down, and there was a long bull candle followed by other candles that started showing price trading above. And on this candle here, we can see here that price is clearly above the moving average. Let me simplify it here. Here you can see that price is clearly above the moving average. The high of the candle, the low of the candle where the price close to is above. The high and the low of the bull candle is also above the moving averages, which makes it a clean signal and indication for a buy. And here you can also see that your OSMA is also positive. So this already gives the conditions for a buy. So if it's going to be taking a buy, the next thing you're going to do is you're going to measure the distance of the close of the candle to the moving average. If it's less than 60 pips for you to take an instant buy, and if it's more, then you simply take a pending buy. So right here we have 60. So it's about 60. All right. So let's measure that. So we have the close of this. So we have 65. So this is 65. So you can decide to take an instant buy right off here, or you just place your pending buy 5 pips below or 10 pips below, so that it triggers. And if following the strategy, and your stop would simply be below here. So if you measure your stop from here, measure it down here, is you have about, that's about 185 pips. So you have 185 pips, and 185 pips using a 1 to 1.5 ratio. So you have your stop here, you have your trade here, you enter here, and you'll be looking at take profit of, let's just use 180 pips, that's 90, that's about 270 pips. So we are looking at 270 pips. So that's 3450. 3450. So this is where you're looking at for your take profit. Now, but what do you see happen after you took this trade? After I enter this trade, your stop is here. And right here, you're seeing here that price actually came up, which is nice. And it also came up further before coming back down and back to your take profit. And right now, price is trading below your entry. Now, at this point here, if you've taken this trade, right now, your trade will be closed, will be on the negative side because price is currently trading below your entry point. Now, but since you've already seen this crossover that has happened here, this is a strong indication for you to get out of the trade. So you should have been able to get out of the trade before waiting for it to eat your take profit. And when you look at the weekly moving average, the weekly time frame, you will see that the price is more of a sell than a buy based on the candle formations that is right here. So what you should be looking for right now is the conditions for a sell than the conditions for a buy. So if you look at this, if you've taken this trade, fine. Even though it didn't work out for you, it's still part of it. You can't win all trades, right? So now for the conditions for a sell here, you see a price is already trading below. And even though price has closed, even though you see here that the candle formation has closed below, and you can see here the eye of this candle is still below the 10 moving average, which also fulfills the condition. But here you can see here that OSMA is not yet negative. OSMA is still positive. So at this point, we are simply not doing anything until we get a clear negative OSMA signal. So immediately we get a clear negative OSMA signal, we can now take a sell trade and put our stop right above. So once we get that sign, a fractal formation candle, a fractal signal would also show possibly at the eye of this place or here, where we can now be able to put our stop in to take a sell, because the trade is more of a sell than a buy. So that's the conditions for a buy and a sell. So like I said, this is trading off daily time frame. Your risks will definitely be higher because your stop will be high. And so you also need to be careful of whatever lot size that you are using on this trade, and your capital also to as to be reasonable. Now, but even though that you want to use this strategy, you can also use them on the lower time frame. I'll create another video that is talking more on the lower time frame and how you can also make the best use of this strategy on the lower time frame. So I hope you're able to learn. If you got value from this strategy that I've shared with you, simply like this video, and also put in your comment if you found value in this. All right, so thank you very much, and don't forget to subscribe.